Hey guys, this is Nick from ForexForNoobs.com with the daily analysis. Today is Thursday, the 29th of August 2019. Time is 11:59 a.m. here in the UK. And you're looking at a USDCHF daily chart. In today's analysis, we're going to be looking for price action setups across all these pairs listed here and across most of these timeframes listed here. So let's get started. First things first. Actually, first things first, we're going to look at the news. I was about to say something else, but we should look at what's coming up on the news. I already know, spoiler alert, that it's nothing. But I don't think I've done a public analysis session. We've only been doing members only ones recently, so I haven't talked about the news this week in the public analysis because there hasn't been a public analysis, so here we go. What do we have today? We have the prelim GDP. Not too worried about that. I mean, it can have an impact on the market if it's way off consensus. But, generally speaking, it doesn't have too big of an impact. And it's usually not too far off of consensus, or the forecast rather. You can see sometimes it's a little bit off, but it's generally not too far off. So I'm not too bothered with prelim GDP. Going into tomorrow, we have building approvals out of Australia. Don't really care about that. I'm just going to ignore both of these. And I'm also going to ignore the CAD GDP and the personal spending from the US. So I'm just going to ignore all upcoming news. When I say ignore, I mean on the larger timeframes. If I'm taking smaller timeframe trades, like 15-minute, 30-minute, then of course I'm going to be concerned about these reports because they can have an impact on the lower time frames. But when we're talking about 8-hour, 12-hour daily, who cares? And there have been times in the past when I said, who cares? And then they had a big impact on price and stopped me out of trades. But the way I see it is you can't really worry about that 1 in 100 situations where one of these reports comes out way off consensus, way off the forecast, and has a big impact. Because it happens so rarely that, yes, sometimes it'll take you out of a trade, but 90% of the time it won't. So avoiding trading around these reports for the 1% or for the even, let's say 5%, for the 5% of times that it affects your trades, avoiding trading around these reports, you're going to lose more by avoiding trading than you are by the 5% of times that you get surprised and it takes you out of a trade. And keep in mind that the 5% of times that it comes off way off consensus, some of those times it can go in your direction. It can help you. So not too worried about these is what I am trying to say, guys. So yeah, let's get into the actual analysis. First of all, we got New Zealand USD. What's going on here? Yesterday, I was looking at this for a potential breakout. That never really happened. For a breakout, I like to see a close below the low, but we've only got a wick below the low, so it's not happened. At least not yet. It could happen today, but right now, it actually looks like we might be seeing a potential reversal here, which would actually kind of make sense. This is a pretty decent support area. It's only really had wick bounces though, so I have to go back to 2006. So actually, I'm going to take back what I just said. I wouldn't say it's a great support area. It does have some history with wick bounces here, but overall it's not a hugely strong support area. But I did place it for a reason, and it is stalling out there. So it's obviously working. It is somewhat effective as a support area. The only big bounce we have from it is back in 2006. That's an actual true bounce. Other than that, we just have some wick bounces. You can see the wick bounce back in Jan 2016. But, even though it doesn't have that much history, we can see that it hit it and now it's slowing down here. So old support resistance, when you have nothing else to go by, 3-year-old, 13-year-old support resistance, as we've just seen here. This was January 2016 and then back in 2006. Old support resistance still has some validity because people look for areas to place their stop losses and to place their entries. Areas where it stopped in the past, even if it was 13 years ago, is still going to be valid. It's weird, but it works. And we can see it stopping right here. So what are we going to do here? If it actually stalls out today, potential to look for a long here. Problem I have with this one is it has a huge lower wick, so the risk to reward ratio is not going to be great. But it is doable. It is doable. It is counter trend. So I wouldn't rush into this one blindly. Honestly, I'd try to get a retrace entry if possible. Retrace entries are a bit tricky when you're dealing with counter trend trades. So this one, I'm watching it, but it's not too high in my list of potentials. It's just a bit risky overall. But I'm still watching it, guys. I'm watching it. I'm considering trading this one. I forgot to say hi. Hello, Abdus, Rohit, and Robert. Sorry about the webinar time change. I changed it pretty last minute. It was only, what, 6-7 hours before? But yeah, I just couldn't really sleep last night. So I just thought I don't want to sleep 5 hours and I get up for a 10 a.m. webinar. Just didn't think that was a good idea. Be all sleepy and stuff. So we changed the time. Interesting here. Sorry, I'm just getting like a bit mesmerized by the charts, and I'm not saying anything of value, but I'm just I'm interested with what's happening with the US dollar right now. On USD NOK, it's rising. On USDCHF, it looks like it might be rising, but it's also possibly stalling out. So yesterday I said that I'd be looking for a potential short here on USDCHF if it dropped lower than this level. Clearly it did not drop lower than this level, so I did not enter that trade. It did get kind of low, but then it turned around and shot up. So good, I didn't enter, obviously. It never broke my entry. Hey, Iceman. So, yeah, what am I going to do with USDCHF, guys? I'm not really liking it that much anymore. The candle is now too big. It's still a potential, let's say. It's a potential reversal if it stalls out here. But it's just not looking that great right now because of the size of the candle makes our risk to reward ratio and just not fantastic. I'm not going to use this as an indecision candle. This candle has overshadowed it, so I'm going to be using this one. Again, because we're looking at the dailies, we're just going to have to wait and see with this one. We're going to have to wait and see if it stalls. USD NOK, honestly, this is just a test trade that I was doing. It's nothing that I'm going to actually take, guys. It's a breakout test. I might go long with a very small position size as a test. So it's not a serious trade if today's candle closes around about here. I'm testing a new type of trade setup that I'm doing. Well, it's not really new. It's back from 2007 to 2010 when markets were trending like crazy. Breakout trading was one of the best ways to trade. But then around 2010, breakout trading became way less profitable, but now I'm seeing a resurgence in the type of moves that would allow us to trade breakouts. So I'm looking for breakout trades. And I'm just in the testing phases right now, but the testing is going to be short because it's not like a completely new setup that I'm developing. It's just something that I'm bringing back from a long rest, an almost 10-year rest. I'm bringing it back. So I'm just doing a few tests, and then I'm going to put it out there for you guys. Well, I'm going to put it out there for members of Forex Mastermind and Price Action Mastery. Nothing on NZDUSD. So let's look for some new setups. USD NOK, don't worry about that. But USDCHF, still looking for a potential short if it stalls out here. But right now it looks like it might go up. So we just have to be patient with that one. New Zealand USD, looking for a potential long if it stalls out here. So short here, long here, pending it stalling out. I don't know if we'll find much else because it's been a very weird week. Between the China tweets from Trump and the Brexit crap that's been going on, dismissal of Parliament, all that. We've just had some crazy swings, crazy moves this week. And I mean, just look at Euro GBP as an example. Opens here this week, shoots down, next day shoots up, today does nothing. So, how are we expected to get trades in these kinds of conditions on the larger time frames anyway? You can't get trades. It's basically done nothing this week. When you think about where it's at compared to where it opened, it's done nothing. Yes, it did push down and then push back up, but look, this is where it opened. This is where it is now. From the open, zoom in a bit, to where it is now is a grand total of 15 pips. Nothing happening. And this is for a lot of pairs. It's not just Euro GBP. You can just see here, it's for a whole lot of pairs. We got move up, move down, move up, and pretty much 55 pips on Euro JPY from the open. No, sorry, I did that the wrong way. No. Sorry, my brain stopped working there for a sec. It is actually the right way around. 55 pips from open. Euro USD, this one's moved down. All right, this one has moved down, I have to admit. But actually, we'll look at this one in a sec. Anyway, I'm getting carried away. Let's actually do some analysis. But I'm just complaining a bit because the markets aren't that fantastic right now, and it's kind of annoying me to be completely honest, guys, because it's been a few weeks of crappy movement. I mean, look at AUD USD. How can you trade this? It's just completely sideways. Even on the lower time frames, it's hard to get a good range trade in here. Guys, don't use the crosshair. That's a slow method. This is just something about like using PCs and stuff, programs like Photoshop. If you got experience with that, then it's just a natural thing you do straight away when you're trying to line something up. And you, in fact, get annoyed when a piece of software doesn't allow you to do it that way. It's actually an oversight from me. I should probably explain that, but it's just something I do without thinking. So I never really thought about explaining it for people who don't have as much experience with computers or with software. So when you want to get something lined up perfectly, generally speaking, like when you're not holding down shift, it moves around, let's say millimeter by millimeter or pixel by pixel probably. But if you hold down shift, it does it like this. So no shift. Actually, let me expand this a bit. That way you could see it properly. No shift. Hold down shift. So when you hold down shift, you can get it perfectly straight. You'll find if you hold down shift on a lot of software, when you're moving things around, it'll behave like that. Shift kind of snaps to certain angles depending on what you're using. It could be different angles. But shift is a generic kind of snap to key for software. So yeah, that's how I do it. Complete oversight by me. I should have thought of that. Right, CAD CHF. Again, like, how are you expected to trade this kind of movement? CAD JPY, no trades, no trades. Euro AUD, just a mess. USDCHF, untradeable. Euro GBP, we already looked at that, untradeable. Euro JPY, nothing. Euro USD is interesting though. I kind of like this. So, towards the end of last week, we had a big push up. We gapped up at the start of the week and then it just turned around and pushed down. Now it's sitting at a support area where price has stalled out twice already and turned around. So I'm actually very curious to see what happens here. There's obviously two potential things that can happen here. Price can break through support and continue this overall downtrend that it's in, because it's in an overall downtrend, or it could stall out for a third time and turn around. I'm open to both possibilities, and people on YouTube sometimes get angry when I say this because I'm not saying a definitive direction. But I honestly think the traders who give you a definitive direction are the ones that have no clue what they're talking about. Unless they're trading fundamentals, they're trading news, the economics, which I don't do, then they have more of an idea of a country's economic strength currently, and they can better predict the overall direction. But I don't do that. I don't really like news trading. I think it's more valid for the longer term trades and not for the kind of trading I do, which is on the daily mostly, but it's overall compared to what a fundamental trader would trade, it's short term. So when I say I'm open to both possibilities, it's because price I haven't seen a candle yet that tells me what's potentially going to happen. So what I'm looking at right now is a strong bearish move. That's kind of stalling out on support, but it's not fully stalled out. I mean, we still just today got a lower low. It's not a significant lower low, but it's lower today than it was yesterday. It's not moved much, but we've got a lower low. We're 14 hours into the day since this candle opened. It opens at 10 p.m. So we're 14 hours into the day. This candle has moved a fair bit. Well, no, that's an exaggeration. It's created a new low. So I can't say definitively that this candle's stalling out yet. It looks like it might be stalling out, but I can't say definitively it's stalling out yet. So I'm keeping my mind open to both possibilities. If this candle continues down, then I'm totally open to taking a short trade here in line with the bearish trend. If this candle stops on top of here, then I'm going to start looking for a potential long trade here. So I'm just waiting to see what happens today to tell me what I should do tomorrow and on Monday. And I can't really make a decision or a prediction until I see what happens today. And I really think that making predictions like that is useless. And it's actually worse than useless. It's dangerous. Because when you marry yourself to an idea, you tell yourself what it's going to do, right? You say to yourself, well, clearly it's going to go down from here. We've got a new low today. Clearly it's going to continue down. Now you've got this idea in your head that it's going to continue down. So you're going to overlook the signs that tell you that it's actually not moving down, it's reversing. because you've already made up your mind that it's moving down. So now all you're looking for is signs that it's moving down, and you're going to ignore all the signs that price starts to give you that, hey, this isn't moving down, this is stalling out. This is stalling out, and you should be in long. You shouldn't be looking for a short, you should be in long. So getting that idea in your head that it's going to do one thing or the other, in my opinion, in my experience, is actually quite dangerous. I'm staying open-minded with this one. EURUSD is on top of a support area. This support area has shown itself to be quite strong in the past few weeks, and we're already seeing signs of it potentially stalling because it's slowing down quite a bit, but it could continue down. So I'm going to keep my mind open. If it continues down, I'll be looking for a short. If it stalls, then tomorrow I'll be looking for a long. So yeah, I'm just going to keep an eye on this one and see how it goes. But there is definitely potential here either way. I'm really excited for next week, guys. Usually September is when volatility starts to pick up again in the Forex market. We've had a really crappy summer. And at the risk of sounding like a broken record, keep in mind that I've only done members only webinars recently, so people who are viewing this webinar who aren't members might not have heard this yet, but a mix of summer trading, which is generally just not that great. This Brexit news and this China trade war news has just led to very crappy trading conditions. But at least now summer trading is going to be over starting next week. That's when most traders start coming back, start of September. So volatility is going to pick up again, and we should start seeing some movement again. I'm just going to do one final scan of the charts, but I don't think there's anything else. Yeah, so volatility should pick up again starting next week. Not to mention, we have a pretty heavy news week next week. Loads of news, which again causes volatility, which is going to be quite nice for us. So I'm looking forward to next week. This week has been rather slow, but we do have some potentials. I'm going to take a quick look at some CFDs. Oh, that gold-silver ratio has tanked since yesterday. Or the day before, I mean. Nothing much happening on the CFDs. Take that back. Take that back real quickly. SPX, USD. I know most of you don't trade this, and this is stuff I've only started looking at myself recently. But it looks like it's in a bit of a range here. Interested to see what happens when it hits the top of this range. There's potential for a short. But yeah, most of you don't trade this. But anyone outside of the US, your broker should give you access to it unless you're trading with a US broker. And CFDs, my strategy is completely valid on CFDs. This is the S&P 500 CFD, by the way. It's called SPX USD. Anyway, check it out. There's potential for a short if it hits this resistance area. It's not quite there yet, but but it's getting close. Just take a quick look at BTC USD. Not going to trade there, but I'm just curious. Yeah, all right. So guys, let's do a bit of a wrap up. We got New Zealand USD for a potential long from the support area. USDCHF, I'm just waiting for this candle to close to kind of get an idea of what's happening here. USD NOK, don't worry about this one. This is just a test thing I'm doing. I should actually just mark it a different color. I'm going to mark it red. This is just a personal thing for me that I'll go into more detail pending my tests. Euro USD price is potentially stalling on the support area, so I want to wait and see. So basically, free wait and sees on today's daily candle. I won't be trading these until tomorrow, essentially. I know that's boring analysis, but guys, that is the markets right now. You've seen the price action. Markets aren't really moving. They're just kind of doing sideways movement. Makes it hard to trade. As we come into September next month, in a few days, I believe things will start getting back to normal. Monday is the 2nd of September, heavy news week, and this is when most traders get back from their holidays as summer starts to wrap up. So I'm pretty excited for next week. I don't normally look at CFDs, but I'm going to start implementing them more and more. So if any of you guys have CFDs that you like trading, that you're interested in trading, please let me know about them. I'll add them to the list. I'm very interested in trading them myself because I have found during periods like this where the Forex market's not doing what you want it to do, sometimes CFDs are going to be doing what you want them to do. So just expanding your potential things that you look at, even outside of strictly Forex, gives you a lot of potential setups. Unfortunately, US traders cannot trade CFDs, so you guys are out of luck. Complain to whoever the authorities are that you complain to for these kinds of things, because it's really unfair. Complain to them, tell them you want CFDs, see if you guys can get it changed. But I can't do much. All I can do is share some analysis on them, take some trades on them, and hopefully you guys find a way to do that in the US. Yeah, I do have oil on my CFDs list. I have US oil. Could also do what was the other pair? So it's called US oil here, but on forex.com it's called WTI. But it's the same thing as you see. Yeah, so this is the same thing. Yeah, the Chicago Futures Exchange doesn't even want Forex as competition. Oh, the Chicago Mercantile Exchange, CME or something. They don't like competition. You know, if they don't like competition, they should make futures more appealing to retail traders. Because instead of trying to ban everyone else or all the other competitors, I always find it's better to make your product more appealing. Futures is very confusing, has a higher level for entry, and there's just not many brokers out there that provide futures. You don't have the vast variety of brokers that you have with Forex. It's a lot harder to get into futures. So I really think CME should focus on making their product more appealing to traders rather than trying to get more restrictions on the Forex market and restrictions on being able to trade CFDs and all that kind of stuff. It is just a completely ridiculous approach. Let's keep our product crap and let's ban every other product out there. And they have the lobbyists to do that because they have a lot of money and they have the power. Sad state of affairs over there in America, guys. I'm glad I don't live in America. Don't get me wrong, I don't hate America or anything. I'm just saying, as a trader, I think America's a cool country. I'm not saying I'm glad I don't live in America because America sucks. That's not what I'm saying. I'm just saying, as a trader, I'm glad I don't live in America because as a trader, there's so many limitations in what you can do in America. Yeah, but a new one opened up recently. I think that's the third you're talking about. I can't remember. Is it IG Markets? Or one of those with a kind of red background on their website. Can't remember. There's too many brokers these days. All right, it is IG. So they only opened up recently, which gives me hope because if they've made a move into America, perhaps others will start opening up in America. I think they're just going to wait and see how IG does over in America. And then if IG is doing good, they'll be like, okay, we want a piece of that pie. Just send me, and Giovanni, I'm interested in stocks too. Guys, just send me the pairs you want me to look at. Send it to my email. Say, hey Nick, take a look at this, and that. I'll open them all up on my on TradingView. All the ones I can get, I'll open up. If I need to pay for a subscription for others, depending on how tradable they are and if it makes business sense, I'll do so. Obviously, I'm not going to I'm not going to be paying like 100 per month for a subscription to charts that I can't even trade because that just doesn't make any business sense. I treat my trading as a business, and some of these accessing some of these things cost you like a few hundred per month on I can't remember how to get to the prices. How do you get to the prices? Because if you open it up, it says delayed. There we go, learn more. Upgrade now. Yeah, here we go. So if you want to get the CME Globex, this is another reason why CME sucks. They charge you 110 per month just for the charts. Like, make your product more appealing to retail investors, and then people are going to be more interested in trading. But yeah, if there's not enough demand, I'll definitely look into that. So just let me know what you guys want me to look at, and I'm definitely willing to add it to the things. But see, this is a steep price to pay for a trader who has a small account. Let's say you have like a $5,000 account, right? And you want to get into trading on the CME. Let's say you even have a $10,000 account. you're going to need to be making, obviously at a minimum, 110 USD per month just to cover your fee. Well, no, you're going to have to be making more than that just to cover all the fees. But this is just one of the fees that gets added on. So you've got your TradingView subscription, which isn't much, it's $20 a month, whatever it is. You got this. Then I believe that a lot of these CME brokers have a fee just to trade with them. So you might end up nearing 200 in fees just to trade this market. So you're going to need to make that at least. And, you know, that's definitely possible. But what if you're on a $5,000 account? It's just so unappealing to a retail trader. What if you're on a $2,000 account? Then you're going to need to be making 10% per month just to cover your fees. It's absurd. Anyway, guys, we're way off track here. Please do send me some pairs. I'll look into them. Well, not some pairs, some instruments, I believe they're called. Instruments. They're not pairs outside of Forex. I'll take a look at them. We'll add them to the list and we'll expand what we trade. So thank you guys for attending. It's been fun. It's been more fun than our last few webinars where nothing's been happening. I'll see you guys for, I was going to say for Monday's webinar, depending on the pairs you guys send me or the instruments you guys send me that I add to this list and I look at. Depending on what you guys send me, I might do a webinar tomorrow just to see. No, but I probably won't actually, because it's just going to be the end of the week anyway. And all those markets, a lot of those markets are only going to be open for like 8 hours or whatever. Yeah, we might do a webinar on Monday instead. Instead of doing a Tuesday webinar, next week we might do Monday, Tuesday, Wednesday, Thursday, and we'll take a look at some new things, depending on what you guys send me. Oh yeah, of course, yeah, I forgot about that. It's Labor Day, so stocks are going to be closed. You are 100% correct. Bank holiday for US and Canada, I believe. So yeah, Monday's probably not going to happen. Probably going to be just Tuesday. So is that the Apple stock? Yeah, all right. So I need, it's slightly different from the CBOE than the NASDAQ. So I need this NASDAQ feed. I'm open to getting more feeds, guys. I don't mind. It's not a huge expense to me. Actually, so if I click this, see what the monthly billing's like. Which one did I need? It was NASDAQ, right? They make this as confusing as possible, don't they? Oh, that's not bad at all. $2 a month. What? I thought it would be way more expensive than that. Everyone can afford this. So all of these would be $9 a month. That's not bad at all. Straight up sign up for a year. Well, that's based on a year actually. Oh, there's no difference if you normally when you do like on most websites when you're doing 1 year you get a bit of a discount, but here it's just the exact same thing. So you may as well pay monthly. Why pay for a year when it's the exact same price? But I'm not going to sign up right now. What I'm going to do is I'm going to look at all the pairs you guys send me. If you could please send me that via email. I'll remember it, but just to be sure, I'll compile a list of what you guys send me. I'll see all the things I need to buy in order to have access to those. I'll see the ones that I can trade with my current brokers. I'll see which ones make sense, and I'll buy these data feeds, and then we'll go from there. It's not this one, right? It's not Malaysia that we're looking at. I can't see the FTSE here. But anyway, guys, look, we're getting way sidetracked here. I'll wrap this one up. Thank you guys very much for attending. This was a fun webinar. I'm actually very curious to see what happens with this experiment, looking at some different stuff outside of strictly Forex. We've been doing it a little bit recently, but I've never really had a proper list. And I don't have a lot of experience trading outside of Forex, but whenever I look at the charts, it's just clear to see what's happening. The price action works. My strategy works on there. So I think this is going to be fun. So yeah, thank you guys, and I will see you. I'll see you for Tuesday's webinar. Thanks for attending, and bye.